The Mag 7 stocks are done reporting except for Nvidia, but earnings season is rolling on, and we have a bunch of prominent names reporting this week, and I picked out 5 as I always do. Now, the interesting thing about these stocks, and I'm going to just list them out up front this video, they are Carvana, Walmart, Deere, Quanta Services and Newmont. So, quite an interesting collection of names this week that you should be watching. But the interesting thing about them is that the best performers year to date of the shares are not what you might think. So, out of those, and given the publicity, you might think Walmart perhaps would be the best performer, or even Newmont, the gold miner. But no, the best performer year to date is Deere. DE is that ticker, up 29.2% year to date. Newmont is number 2 at 24.3. Quanta Services, which if you don't know Quanta, they do the infrastructure on energy. So you can imagine how hot that one is. And that's up 19.2. And then you have Walmart at 18.7%. And Carvana, the only one that's really lagging because it's being sold off along with software stocks, cybersecurity stocks, travel stocks. It's all being sold off. Anything that's done on the internet, basically, or online, is being sold off because of AI disruption fears. Whether or not that's actually going to happen remains to be seen, but nobody cares. Wall Street's just selling. So those shares are down 14.3%. But all of these stocks over the year period are up, with Newmont up 163%, Quanta Services up 80%, Deere up 29.3%, Walmart up 27.5%, and then Carvana, which is down year to date, but over the past year, still up 25.9%. So these are interesting times. Let's take a look at these charts. Why should you be watching them this week? And we're going to start off with Carvana. It is the most volatile, as I just showed you. And you can see that they are coming off a miss last quarter. But the street didn't mind last quarter. It still bid up the stock until all these worries about AI developed. And now the shares are pulling back, as you can see. But otherwise, it has had a good earnings surprise track record since the 2022 sell-off on all the tech stocks, and then they've gotten it together. But is this last miss portending something going forward here? We'll see. You're not seeing anything different in the earnings estimates here. You're not seeing them being cut dramatically, just a little bit of weakness for 27 perhaps. So we'll see. Maybe this is a deal here, still trading at 46 times, even with the pullback. But earnings still expected to be up 43% in 2026. So that one is Carvana. Then let's take a look at Walmart because it has the more traditional chart. Shares busting out. Everybody's oohing and eyeing over Walmart now. It has a great earnings surprise track record. It does have 3 misses. You can see this one just almost off the calendar. One more day, it'll be off the calendar. But for now, still showing up as 3 misses. But this is an impressive record, especially for a retailer. Shares are busting out. Earnings expected to be up 11.4% in the fiscal 2027. So nice double digit going forward. Is it really going to do that? We will see. But Walmart's on everybody's watch list this week. Then another one, as I mentioned, also very hot right now, Deere Company. I can see it's a number 4. It is a sell going into this, but it too is a great earnings surprise track record. Just 2 misses, but also missing last quarter. I kind of don't like to see that here with the shares kind of stalled out and now they're soaring. but we'll see if they turn it around here. PE's at 35 now after these shares are up so big. And most of this is year to date, a year to date rally. So earnings did decline last year, 27.8%, expected to be down again this year, 9.1. I have to take a look at that. And you can see that here. That's where 2026. So it does look like that's correct, but we are going to see, we saw this big decline in here and now we're seeing it again. So not sure why the disconnect with the shares really taking off, but the market is forward looking. Maybe they think that this is all going to be in the rear view mirror. It's going to get revised higher. We will see this week. Then we want to take a look at Quanta Services. This might be one that's not on many of your radars, but it should be. Like I said, they design, install, repair energy and communication infrastructure in the US, Canada, and Australia. Look at this chart. It's pretty good on the earnings surprise side. Just two misses again, like some of the others we've seen. Shares busting out to new highs, but this is what you want to see on the earnings. Up and to the right, not like what we've seen with Deere, where it's going down there. This is up and to the right, and earnings for 2025 expected to be up 18.1, but then another 17.3 in here for 2026. That's the nice gain we see there. PE is stretched at 42 times, but this is what you're paying for this AI infrastructure type stock right here. But that looking good on the earnings. We'll see if they beat again. And then I did want to finish up with one of the gold miners. There's a bunch of them reporting this week. Newmont is the big one, though. It's the largest gold miner in the world. And so I'm going to be watching this one to see what happens with all that free cash flow, because so far the gold miners have been reporting record free cash flow, as we knew, with average gold price around 4,000 to 4,100. So we'll see what everybody reports. Obviously, it's now closer to 5,000 for this first quarter. So earnings should continue to rise as long as they're executing. Execution is key with the gold miners. Newmont, 4 beats in a row. It's turned it around since gold has really taken off. And the analysts can't really keep up either. They can figure out how much production, but they can't keep up with the price side. So they're falling a little bit behind. That's why we keep seeing the beats. PE is just at 15 because those earnings are soaring. 2025 expected to be up 82%. 2026, 27.8%. And then we'll see, because so much depends on the price of gold with this one, but we should be getting something with the free cash flow as well. They pay a dividend. They were doing a huge share buyback. Will they do a special dividend with some of this money? They also were paying down their debt, but they were ahead of schedule because they have so much free cash flow. So will they just get that debt really, down to almost nothing this year if the prices remain this high? We'll see. But I'm going to be watching Newmont and all the others reporting this week. Newmont, ticker NEM. As you can see, it's an interesting time out there this week. It's not all about the Mag 7s anymore. Besides, the Mag 7s are mostly done now. And I'm not meaning done having reported. It's mostly maybe over. So will some of these stocks be in a new magnificent grouping? You can make an argument for several of them, perhaps, but we will see. So I'm going to be watching all of these this week. I'm going to be posting a lot of charts on Twitter, Blue Sky, StockTwits. Go over there to check out even more earnings charts. We're getting some home builders this week. I'm going to be covering those also on the socials. So go there, but be sure to subscribe to get all of our earnings videos. We've still got a couple weeks to go. We haven't even had the retailers yet. So get us on Zacks.com/YouTube, and I'll see you again next week with some more charts.